All right, and welcome back to day number 2 of investing in a fund. So let's take a look to see how the market performed today. This is the home page, so I'm going to scroll down here. You can see for February 25th today, the S&P 500 was down 0.5 point. The Dow Jones Industrial was up 0.37. NASDAQ Composite was down about 1.5 points, and then the New York Stock Exchange Composite was up slightly. So as you can see here in terms of the top strategies, so all of the strategies from our test funds, it looks like Sharp Measure is here on top for the week, 2.3% earned on these Sharp Measure based portfolios. Now, something to point out here, these are 5 and 8 stocks here, and they've got 8 to 10, 15-year history. So essentially what that's trying to communicate is that in today's market, meaning today for February 25th, the strategy that worked best was utilizing the Sharps measure for selecting your stocks, which the Sharps measure is essentially the risk premium over the risk of the asset. So it's how much risk that you're earning for each unit of risk that you're taking on. It's a historical measure that is pretty popular among people on Wall Street, and it's generally indicative of stocks that are a little bit more stable over time. So the way that I read this is just that for today's market, there was a movement towards stocks that are a little bit more stable. And then you can see there from the asset count that if you had fewer stocks in your portfolio, like 5 to 8, you likely are doing a little bit better this week. So moving on to highest volume for the day, you can see here the top volume earners for the day. Now this is just based on quantity of shares traded, not the dollar value of the shares traded, but you can see here some pretty typical corporations in here like Tesla and PLTR, which were 2 of them that we selected for our portfolio. So just highlighting to you here where a lot of the volume was at for today. And then we also have our biggest gains and biggest losers for the day. So you can see some of the top gains. Now this is just strictly in terms of price movements. So not in terms of market share. So these are the biggest gains in terms of price movements in their stocks for the day. Redo Ecto Solutions was the top earner at 76%. And then you can see some of the biggest losers or biggest losses that occurred today. Nikola Corporation took another hit, another 28.7% loss on the day. But this is just here as a way to kind of highlight to you some of the biggest movers and some of the gains and losses. There's not any reason for including this. It's not like these stocks are particularly any better or worse than anybody else, so there's no sort of recommendation here. It's just for your purposes, so that way you can understand where the volume is and who had some of the largest gains and losses. So let's go down here and select trends so we can see how the portfolio is doing. Now, I purchased the shares yesterday about mid-afternoon. So some of the stocks like Tesla and PLTR did have a pretty negative day, although some of that was avoided because of the timing of when the shares were purchased. But again, today there were some more losses experienced. Now, for the first day, we did beat the S&P 500. It's that green line right here is the portfolio, and did a little bit better, although both of us lost, but we did a little bit better than them on the first day. And then on the second day, we lost out a little bit more. We experienced about a 1 point loss for the day versus the S&P 500, which was closer to half. So we'll see how this goes. When you come down here to taking a look at the top gains and losses in the portfolio, probably a criticism that you could throw at me was, well, Matt, when you built this portfolio yesterday, you didn't really justify why you were picking one stock over another, or why you picked a certain particular stock that I did. So I want to take kind of a quick moment here to just kind of highlight kind of my thought process behind picking stocks. Years ago, when I learned a lot of this methodology, I learned that the statistics that are behind it can be really powerful. And when you leverage them properly and you properly index your portfolio, this is going to sound silly, but the assets that are in your portfolio don't really matter all that much, as long as you have a good, diverse collection. And if you have only 5 stocks in your portfolio, of course, that's harder to do, but you want to have a little bit of variety in there and having a properly indexed and balanced portfolio. And if you have that, you're going to produce a market-based return over time, and which stocks you pick will matter a little bit less. That's where things like activist investing and things of that nature can come into play, because if you don't like a particular company or you don't like their strategy, you can purchase shares in them and then use your voice as a shareholder to exercise your voice and let them know what you think. And a lot of people would like to engage in things like that, but don't necessarily want to include them in their portfolio. So it kind of unlocks all sorts of different options for you in terms of what you want to include. And like I said, this is a virtual platform, so you can build and track these things over time just to see how they do and whether or not you like it. But in terms of the assets that we selected for this portfolio, there really wasn't a whole lot of rhyme or reason that went into it. Tesla and Palantir were on the top volume list. There's a lot of media attention that comes with both of those corporations. Tesla, I think very favorably about their Optimus robot and their future strategy with vehicles. I think they have a bright future there. A lot of people don't agree with that. That's fine. Same thing, Palantir has some great technology offerings that they're working with. And then like MNSO Group, that might not be a company that you have heard very much about. They're a big retail operation that's come out of China. And essentially what they do is they take Japanese style goods and then they market them internationally, both domestically and in China, as well as they've started to make inroads here in the United States. And beyond that, I can't really comment. I don't know if they're in Europe or not, but to me, it's just a name that I recognize that I wanted to be invested in for a little bit of time. Now, obviously, with the trade tariffs and things of that nature that are going on, that could be a little bit risky, but I feel like their growth over the last few years has been really spectacular. So we'll see what happens. You know, you can't control what the governments are doing or the different tariffs or things that they put in place. You just have to kind of make the best of it. And, you know, a real investor is not going to take their money out of the market. They're just going to find the right assets to invest in. So we'll see how all of this plays out. And of course, as the tariffs and things of that nature, all that political discussion, as that comes up, you'll be able to see some of those results probably right here in this portfolio. So we'll see how that all works out. But, you know, in terms of some of the other assets like CTAS Corporation, that's just a very recognizable name. I think as we have this return to office, they're a corporation that offers a lot of goods for corporations and office settings. So I think that they're going to naturally see their sales increase over time as people return to the office. And then, of course, I just wanted to capture an energy corporation and then a lithium corporation. Lithium is going to be very important, primarily for battery technology, but just as a resource in general moving forward. So I thought, you know, this is just kind of a good portfolio to start out with. It's somewhat diversified, some names that you know, maybe a few that you don't. But to me, again, it's more about the statistics that I'm leveraging in order to build and maintain the portfolio and less about the companies. So I feel like as long as the companies are pretty reputable and have decent metrics, I'm pretty comfortable with using them. But again, we'll see how this works out, and you'll get to see firsthand over the next few weeks, you know, whether or not that was a mistake on my part and I needed to do more research, or whether or not what I'm coaching here really from a statistical standpoint will work. And, you know, it's worked out for me over time, but here we are on social media presenting it to everybody, and, you know, you can't predict what's going to happen. So we'll stay tuned and find out. So thanks for tuning in today, and we'll see you at our next update tomorrow. Take care.